Welcome, and here we're looking at the US dollar index, and we've had a nice clean break of the 80 here, which in one sense brings it down into the next larger degree of bearishness, and that's fine. So we can expect it to come lower still. However, it's this low here now, because from this low here, a breaking of that would basically give it a bigger bearish picture and look at it down at around the 77 mark. Now, as it stands at the moment, this can still be up for wave one, and then an A and a B and a C wave coming down to here to finish in here, and then move up from there. So we need to be a bit mindful of that. And it is this price here, which will be different on different platforms, but wherever that is on yours, that's the trigger there. And the same for the euro on the upside as well. So when we're looking at the euro here, it'll be this figure here, this top here, that needs to be, if that gets taken out here, then we've got a larger bearish picture that will be unfolding to the upside, because at the moment we've got an A wave in 5 waves. You can count it in 5 waves. You can also count it in 3 waves as well, but it doesn't really matter. Then we've got this corrective B wave here, and then we've got the C wave, which is the 1, 2, 3, 4, and 5 to here. So a breaking of this here would naturally turn it into a different count and a larger picture as well. So let's just drill into here to see what we've got and how we can handle it. So it is this high here for this particular point here. So a breach of that would send it higher. And as you know, the Elliott's had a bearish count on this, and the TradingLevels has had a positive count on this, essentially being positive above the 130 here after this retest through here, made it positive, and then finding support on top of 133, which is another group one, smaller degree. So it's been a positive thing for the TradingLevels and a bearish thing for the Elliott. And it's not that one makes one stronger than the other or better than the other. It's just nice to have them both telling the same story. Then it just gives you a bit more confidence in the market. And for the US dollar and euro, it has been, times of confusion, and it still is really, but let's just work through this. So, at this stage here, we're looking at the 138 here, navigating through that, and from the 135 here, we can look at this in a positive light now in terms of the 1, the 2, the 3, the 4 here, and the 5 up through to here. But it's also not that positive as well, because the wave 4 here overlaps wave 1 here. So that's a breaking of the Elliott rules. But in leverage derivatives, that's quite a common occurrence. So we could run with that for the time being. And it is quite a clear 3-wave structure here, but it could be a larger one still, in terms of up for 1, back for 2, then up for 1 and back for 2, and then into a 3rd wave here of this structure here, the 1, 2, and 3 here. But we can't run with that just yet. We'll just need to navigate the 138 here, and as you can see from wave 4 here, we can see that we've got a little wave 1 and 2 and a little 3rd wave up through here. So let's just drill into that a little bit. In here from that 4th wave, we've got the 1, the 2, and we've got the 3rd wave in through here. So we should get a 4th and a 5th here, and then we should see an A, B, C across here. Now, after this A, B, after this corrective process here, then if we get support on the 38, then that would be a nice long trade from that point. But there can be a top coming into play through here. Now, if we drill into this on a smaller scale here, it should be well, if it's terminating here, it'll be in this black numbers here. If it's not terminating here, then it'll be in blue here of a smaller degree of structure. So same thing again, we've got wave 1 here, wave 2 here, just on the 15-minute chart. You can see wave 3 here of 1, 2, 3, 4, 5. Now, we've got a little sort of 5-wave structure here, so that could be the top of the 3 there. but it also could be the top of the fifth wave as well. I don't think the fifth wave here, I don't think so, because if the extension's in wave 3, then wave 1 and wave 5 will be about the same in terms of distance. So this is a little bit small here, but even so, it is a corrective pattern. It is happening across the 8 here, number 8. So you know, as always, well, basically we're just looking for, you know, we're just looking for that particular finishing here, moving up to here, then having an A and a B and a C coming through here. Now, if it fails to get back up there and moves here, that's fine. If it finds support up here somewhere, then you can use a reference point to move higher through here, or the top of group 1, which would be 138.30 at that point there, and going up for a third wave. So if you can identify this as being corrective here, then that understanding would give you that this high here would be taken out. Okay, so that would be further to the upside. But as I mentioned, it may not be wave 1 here. I'm putting this in more positive light. It can terminate, this structure can terminate here and be the termination of a larger structure. So just going back here again, looking at this 1, 2, 3, 4, 5 of this fifth wave here. So it can terminate here. We need to be careful at this point here. But after a correction, if there's support found, then you can move to the upside. The Australian market as such, also just viewing this in a positive light at this stage, but at the same time, you know, we need to understand that we are below the closest largest number. So that means that, you know, and it is this, whatever's happening here now is maturing. So, you know, we need to really, you know, be on the right side as such. Now, for a positive market here and counting 5 waves up through here, this would be the A wave, the little B wave for the B wave here, and then looking at wave C coming down for wave 2 here. If that's the case, then we'll see a move up from here. But you know, we're not interested in going long really from here until we've got support on the 90, because if that was the case and we were looking for a wave 3 to the upside here, then it would, this blue wave 3 here would be longer than this wave 1 here. So there's no reason to risk, you know, unnecessarily to get in here until you're on here. But of course you can do that, but just drilling in here a little bit. If that is the case, that A, B, C here, this A, B, and then down for the C here, and as it stands at the moment, we do have a little impulse wave up through to here, and then we have a nice corrective wave here. So basically, up for 1, it'll A, B, and C here in 5 waves here for wave 2 here. So it can push up from these lows here. If that's the case, like I said, there's support up here, then you know where you are, or you can go on the 89.50 here as support. If that's not the case, then we're obviously still coming down, and we'll have to look at a bigger picture coming down in terms of this being the 3rd wave here, some 4th wave, and just moving, you know, just moving down here. But you wouldn't want to short either until you had the 89 as resistance here, or breaking of this here. Right, so you know, still work. This whole thing that we've been looking at is still working itself into a corner, and still can be bullish and still can be bearish. 90 back up here, 90 support is definitely the upside from that there. Otherwise, we'll be seeing lower ground. Okay, so the Euro Australian in the weekly chart here, essentially we're looking for that intermediate wave 4 here, that low here, and it's probably in place in here. It just makes this wave 4 look a bit small in compared to this wave 2 here, this intermediate wave 1 and 2 to here. So anyway, let's just drill in here. But many times I've seen where markets come nicely up here. This is sort of a variation on the classic trading levels pattern. There's probably about 3 or 4 of those variations. But in this case here, you've come up, you've hit the target, got the reaction, you've got the first high above the level, and then you've got support here, and then pushing straight up from here. So that's a real possibility from that point. And if that's the case, that's where we are there. And drilling into that here, this is how it would look on the daily chart if this was the case. And it fits okay. You know, we've got 5 waves down here as well. That could be counted in 2 different ways, but we'll just call it an A wave, a B wave here, and 5 waves for a C wave through here. So if that's the case, we've got this basically an expanded flat in a wave 4 here. So an A and a B and a C, and then moving up from here. This little circle here is the 50 and the 61.8 retracement level of this move down through here. So I was also thinking that, you know, if this was the wave 3 top here, then this here would be the A wave here, and this would be the B wave pulling back up 61.8% to where this current high it is here, and then around here somewhere we would see this fade out to a wave C. So basically an A, B, and C would be the alternative count. But as it stands, we're going to be leaving this here, and let's have a look at what we've got in here so far. So if we were counting this in a positive light here, then we would count it like this: up for 1 and back for 2, and then up for 1 and back for 2 of a smaller degree, and looking for this third wave up through here in green in 5 waves. So 1, 2, 3, 4, and 5 to here, then wave 4 pulling back probably into the 155 here, and so on. The alternative here is basically that this is the A wave down here, and then we've got an A and a B and a C wave terminating here as the B wave that I just mentioned, and rolling down from here. So you can imagine that the support on the 155 would be critical, and in getting support there, we'd have to look at the classic trading levels pattern coming across here as a smaller wave 4, because we'd be in 1, 2, 3, 4. Let's go and have a look at that. Okay, so I haven't got this labeled. Well, let's go to the next one. I should have it there somewhere. There it is. So in looking at this, our idea on the Friday or last week is that if the 153, the top of group 1, found support, then you'd be long. So if you were anything at the moment, you would be long, and you would be trading to the 155, and you probably would have gotten out on the Friday, Saturday morning, whatever. But the count here is that, you know, this is quite a clear A, B, and C here, and then we've got a messy structure in here, but it does count impulsively: the 1, the 2, the 3, A, B, C for the 4th, and little 5 waves up for the 5th wave here for wave 1, little A, B, C for 2 here, and then we've got the 3rd wave up here. The 3rd wave would be the 1, the 2, the 3rd. Have I got this on a smaller one now? But anyway, you get the sort of point here. We've got the top of the 3rd here roughly. We'll get the 4th and the 5th here. Now, it can terminate here as a wave C here and finish here, and then fade all the way down through here, or it can just be the 4th wave and then find support on here and then move up from here. So you need to be patient and allow it to mature across here. Okay, I've got it here on a smaller degree, and I'm putting it in positive light here on a smaller degree blue here. So basically the 1, 2, all the way up for the 3rd, the 4th. I mean, I can see that we could have this as a 5th wave in here, because we've got 1, 2, even to here for, I mean, it still can be the top of the 3rd here. But look, the main point is that, you know, it will react, it will find support, it will push up here and then give some type of corrective pattern across here. And after that, if it's got support here, then you can go long from here. So if you have traded long, you know, you can stay long, but, you know, you're going to get some choppiness in here. Okay, the pound yen and the euro yen are kind of in the same boat as well. We're looking at both of them being wave 4s here after this wave 3 here, little corrective move here. And once again, we're looking for, I mean, if that B wave top there gets taken out, then we know that we're in this structure here, as simple as that. But as it stands, you know, it could be an A wave to here, a B wave, and a C wave, but we're looking positive here. And in terms of this moving up through here. We're looking at this as wave 1, wave 2, and we really want the, to get a nice solid move here, we want the 171 to become the support here, and that would be the trigger for the third wave up through here. So wave 1 here. So we've always been looking at wave at 171 of being the support here. Okay, now I don't know if there's going to be support coming in just yet, because it could do, because it could be up for 1, back for 2, up for 1, back for 2, and then moving up, building a building process of 1s and 2s to the upside. But as it stands at the moment, that move up there is in 3 waves. So I've got to kind of look at it as a B wave, and if that's the case, we'll get a C wave down through here. So basically for wave 1, it's just a larger A, B, and C for the A wave, a simple B wave, and then 5 waves down for the C wave. Now, hopefully I'm proved wrong, and we can get support on the 171. And if that's the case, then you need to go long from that point. Obviously, support, working out what support is the tricky thing. So you need that reference point. So if you had a move up through here, there will probably be a reaction here, but if you've got a first high above the level there and then some type of corrective move, then you can use that as your reference point and move in from that point there. You don't need to be too particular about it, getting the best price and all the rest of it, because we'll be in a third wave and it will be strong. And same with the euro yen as well. Here it's looking a little bit more positive as well, but the same story coming down here for the fourth wave. And looking at this being up for 1 and back for 2 here, but we need to get some evidence. We want to buy new highs, and that's what we're looking for into that third wave here. So just drilling into this again through here. It's a bit cleaner, the euro yen rather than the pound yen, but in its price action. But I've as you know, I've had trouble with dealing with this and understanding this pattern across here. But the main point is that, as you can see, it's still got the classic trading levels pattern, the arrival, the reaction, the first highs above the level here, whichever way you look at it, then the corrective pattern through here, which can be the A, the B, and the C wave here, and building up from here. So look, once again, support on the 141 would see you to the upside. If that's the case, if we just draw this out a little bit here, sorry to take too much time, but basically the 1, the 2, if this is going to move up for the 3 here, the 4th here, the 5th here. Now that's all good like that, but then there'll be a correction here. So, we may even get a retest to here. So you're going to have to accommodate it here by having very small positions in here, and then any pullbacks to get some more here as well, and so forth. So you need to build in it, and you need to keep your stop out of harm's way. So you need to accommodate that. It means smaller position size, less profit, but at the end of the day, it's a safer trade, and it's what you should be doing anyway. All right, I just want to have a look at the pound US dollar for that other reason here too. So this is the pound US dollar on a weekly chart here. So in a bit of a nutshell, we've got this large 5-wave structure down through here. So we have to look at this as being an A wave, a B wave, and a C wave up here. The C wave here should equal roughly the A wave here, and this C wave up here will be in 5 waves, and that's what we're drilling in here at the moment with. So we're looking at from this little C wave here up to, well, this C wave of B here, that should have been a B wave there, but so we're nearing the end here. So we've got the 1, the 2, we've got all the third wave up to here, the 4th and the 5th here for the third, and the A, the B, and the C for the 4th here. So we're looking for a 5-wave structure up through here. And this wave 1 here was quite small, so we shouldn't expect too much from this. As you can see here, looks like we've got a 1, 2, 3, 4, and 5 in here. There's still higher ground to be had here, but it can terminate here as well. So from this wave 4 here up for 1, 2, 3, 4, and then 1, 2, 3, 4, and 5 up through here. So just be aware of that there as well. Alrighty, thanks for listening.